All right, guys, here we go. Today we're going to take a quick look at silver and gold. And first up, of course, is silver here. We do not have a position on silver. We did take if you remember, a quick short position here because we had hit this upper trend line a number of times. Then we came into a major measured move up here as well at the at the, uh, anyway, I think in commodities, at the gray dash line here. So as you can see, well, this little thing I'm moving with micro futures, you can control just over uh, $2,000. You can control 1,000 ounces of silver, and that's how we're able to make pretty good gains either to the upside or downside on silver. But more importantly, right this second, what's going on is that we're consolidating, which is nice, in the upper range of this bullish engulfing clearing takeout candle. But what we're a little hesitant on, reason why we're not FOMOing in here, is that we're still a little too extended up and over the 20. We like taking our positions in and around the 20, either to the long side or short side, meaning we're looking for price action to continue to the upside or possibly roll over to the downside. Okay. Also, let me give you a freebie here. When the 20 and the 200 come together, a lot of people say there are no absolutes, no guarantees, no 100% in trading, marketing, the charts, whatever. But there's actually several. And one of these that we teach our Patreon members is that when the 20 and the 200 come together, you just sit on your hands. And then when you get a confirmation of a bullish engulfing, clearing takeout candle by whatever definition that you call it, either to the upside or downside, that's the way price is going to move. Okay. Then the most important part is that the 20 will move far and away from the 200. You can pull up any chart from a 2-minute chart to a monthly chart, whatever. And when the 20 and the 200 come together, 100% of the time guaranteed, they will separate and follow price. A 20, of course, is smaller, moving average, 20-day versus 200-day or weekly or whatever chart you're on. And it will move to the downside far and away, from because this could have gone the other way too, far and away from the 200. But as we saw, we have this big nice bullish engulfing clearing takeout candle because it took out everything over here, which gave us, good odds, good probability we're going to continue. So right now we're going to see if we can get a little bit more push up and out of silver, and then we'll take around that 25.40, 25.50, whatever it may be, up here, and then go short again because we're looking for more of this consolidation zone here, maybe an up, uh, down, up move, a 1, 2, 3 legs out of this silver price. But of course, they could be right now, whenever price is consolidating, the players are either accumulating, buying more slowly so they don't get a big green candle in here that causes them to have to pay more, or if they're selling off, distributing, then they don't want a big red candle coming in by overselling too quickly. So we're going to wait them out, see which way this thing's going to pop, just like we did over here. If you remember, months ago, we caught almost the exact high here, then rode this down. It was like massive. And, to go back to it, micro futures, gold, silver, oil, whatever, you can control a lot for little risk capital, so to speak. So that's what we're doing here, 1,000 ounces or just over $2,000. I mean, that's hard to beat. So anyway, that's the play right now. Just sit on our hands and see which way we're going to move next. And then for gold, kind of the same thing. We are short gold here. We had a specific measured move here, the gray dash line that we took advantage of, and we're waiting to see if we're going to get a near-term stop out as we come back up, retest it for, possible little, double pivot up here. And then guess what? You got your M formation. I mean, that's kind of a kiss of death there. What you want is a W formation, low, higher low instead of a high and then, a lower high possibly here and then back to the downside. So we're going to keep short here until either we get stopped out, which, it's not going to really take much. And then we'll see if we come up and meet or exceed that gray dash line. And our Patreon members know what significant measure move and how to calculate that. This has a 90% probability of success, either as a resistance zone as you go up into it or a support zone as you come down into it. We even used it on Bitcoin back in 2018 during that bear market. Every time Bitcoin came down into this measured move, it had a 90% probability of a bounce, pretty nice bounce there. So you can make money on the upside, downside, and in a bull market, bear market, whatever. You just have to know what you're doing. But that's the play on gold. We're just kind of holding here, seeing if we're going to try to make another hit of this zone, and then we'll, look to add to the short or continue. Or if we break up and out, then we will evaluate that long position. But okay, guys, thanks for taking the time to watch the video. Follow us on Twitter, check out our Patreon, and then we have our introduction to micro futures to help teach you how to do this stuff. 50% off in the link below. And we will see you on